So I was thinking about doing another 30-minute reversal, but just look at the charts yourself. This is an Aussie dollar chuff. I started on ACAD, and everywhere this is very spiky, but spikes don't really matter apart from the fact that your stops will have to be massive. But when you look at these reversals, there's no, let's start on the left hand side then. So no reversal to the upside, not even here. And then obviously this is a downtrend. Then we get one to the downside here. That the low of that candle there closed below, and there was a lot of accumulation, distribution, whatever you want to call it, sideways and spikes. They've brought in a lot of sellers and buyers at the same time, and then it just collapses. Then over here we get a reversal to the long side here. Actually, yeah, it was there. Or was that the lowest low? Let's just double check. Low 93224, low 93276. So this is the lowest low. So that's the reversal candle. Oh, I didn't check that one, did I? Low 229, low 224. So yeah, so that's the reversal candle there. But you would not want to trade into that high there, or in fact that one there. So you'd probably take the highest as your reversal level, which is this candle here. Then we've pulled back massively, almost instantly. So and as I said before, this is why you don't want to be trading a spiky pair. So you wouldn't have got caught into the long anyway. But this is a brilliant example. I'm glad I studied this now and explained this, because that is why I discount those pairs. Because if you had got caught into it for whatever reason, not wanting to miss the long opportunity, then your stop would have almost certainly have been hit, without a shadow of a doubt. So that's a great example. Here we have another reversal to the short side. So low, high, high, low, high, high. Clearer one this time. The break and close was there, and as you can see, price has just exploded downwards. Then we've got another reversal here. Once again, volatile. The volatility of this currency pair is scary, and again, another reason to discount pairs that have all these spikes. Then we've got the situation here where this is the penultimate low, so a close below the low of that. But remember, I always recommend you find the shallowest examples possible. So you would not want to be considering trading down to that level, because we're at a clear support and resistance level just by all of those wicks below the price, the white line there, the horizontal line. So that's I'm not just cherry picking failures and good examples. This whole chart is bad, and that's why, and this is a good example of explaining that reason. But as it is, we didn't reverse to the downside on that one. Notice those wicks there are below the white line. It didn't close below. Then we had another reversal to the short side here, but again, did it reverse? Debatable. Let's say it did. You would have got rescued out of the potential short trade by the pullbacks. That's why we always wait for the pullbacks, and we know why they do the pullback situation. Then that red candle's low is lowest, so then the reversal to the long side would have been here. Once again, wait for the pullback, and it would have been negated. Then we've got the reversal to the short side here, that red candle. It did go down, pulled back again. So let's just suppose we'd got in it for whatever reason. The pullback would have been 12 pips, and the continuation 30 pips thereabouts. But if you'd waited for the pullback, then you probably would have got a better entry here anyway, and down you go. Let's assume, rather than waste time, that's a reversal to the downside. There's the pullback, there's the continuation. This is an engulfing outside bar situation for the long trade. High, low, lower, high, lower, low. No further lows, so this reverse, that's the pullback. Here's the reversals, and then there's the continuation again, so that was a good one. So you know, they're everywhere. You can just continually draw your levels on the charts until you stop making new highs, which didn't happen until this situation here. That's the highest high. That then becomes the low that you need to close below. Let's have a look at the crosshairs again. That red candle there, because the green one's an inside bar. There's the break below. We didn't get a pullback on that one, so it wouldn't have been oh, hang on, no, I do apologise. That was the penultimate low, the green candle there. That's the highest high. That closed by the looks of it there, and the continuation down. So, you know, you need to assess these on every time frame below you and above you, but the M30 represents a 5-minute swing trend, and they are, you know, quite rare and very reliable. Again, these spikes make it so difficult to see which is the ultimate low, so we'll pick an easier pair. Let's go for Aussie AU. Lot tidier, notice, alright? So we're in a massive downtrend, and we're looking for reasons to go long, using, say for example, the big round numbers and the pivots, and you can see there's no reversal long there, and then the continuation was somewhere around here. Price collapsed. Again, we're looking for potential longs. We just keep tracking these candles as they continue to make lower lows, or a reversal, which doesn't happen to the long side, rarely does in these instances. That's the penultimate low there. That's the ultimate low. That's the close above the penultimate there, and there's the pullback, that long spike, and there's a continuation, 23 pip continuation. Then she's on her way down again. That's the penultimate, that's the close below, that's the continuation. Little pullback as well, almost to the pip, to that green candle's low there. That was the entry level sort of thing. That's the pullback to the green candle's low, this candle here. Continuation. Then we've got pullback that failed to reverse to the long side again. Then we've got this is a potential continuation. There's the break and close below there. Low, high, high, low, high, high. There's the pullback. Once again, then you get the entry on the lower time frame. So there's your pullback to the level. It didn't come straight back because we've got this support level here, the low of the candle I mean, and it continues. No reversal anywhere, even tries to reverse here. Then we get a continuation again. That's the continuation trade. Here we try to reverse again. High, low, lower, high, lower, low. High is tested but fails to reverse up. We could have used the lower time frame to enter, and this actually is a reverse and close outside bar. Low, high, high, low, high, high. Pull back, close below, continuation. And finally we've hit a level. We reverse to the long side. Let's just say that is the continuation candle for argument's sake. I'm not going to look at the level. Oh well, we can see the level there actually. Close is 6282. The high of that red candle is 6278. So that was the reversal. Little pull back the tail on that green candle. Then you probably would have got into the continuation here. A little bit of playing around. So the close of that candle there would have a little bit of drawdown again, and then up it goes. Then on this up move we've got the pullbacks, failed to reverse again, failed to reverse here. Finally reaches a level over here, probably this support level here, acts as resistance once again, so we'd be ready on our level drawing exercise to look for a reversal, and we can see that the high there was never breached, so our reversal to the downside would have been a close below there, which looks like it happened on that candle there. Then we track the pullback again. We couldn't enter until we've had a pullback. We track it using the lower time frames. Finally it reversed to the downside. Here's the low high high low high high again, and there's the close below, continuation. Fails to pull back again, continues down. You use the lower time frames and a histo alert to get your entries. Finally 30-minute up move, high low lower high lower low. Probably hit this area of what I call a flip zone, price pivot zone. That's the correct level there. That's why I have this automated jobby. It goes to the flip script, it goes to the flip area. Didn't quite hit it, but once we've got the reversal, as you can see, all the sellers are out of the market and we get the fast move. Probably would have missed that because it didn't pull back fast enough, but so there was probably no failed reversals in that whole run through that. So guys, do your homework, study any chart you want to, they're all the same. I'll quickly go to another chart. Let's have a spiky, discount it, unspiky. You can see the difference. Lots of spikes, scary. That one's not so bad. Oops, sorry, it's taken a while to load. So, you know, loads of reversal. Here's one here, boom, up it goes. Here's one that went straight into a support, so you wouldn't have traded that anyway. Then you got the pullback, it reversed on itself. So, you know, you're protected from entering in the wrong direction once you understand what these reversals are telling you. Here's a cheeky little one here, low high high low high high. That's the close, that's the pullback, possible entry, and your stop is safe anyway. 10 pips, you know, I have a safety stop of 25 pips on something with a range of about 100, and you divide it. If it's 60 or let's say 50, you need a safety stop of about 12-15 pips. If you've got an ADR of 300, times it by 3, so you'd need a 60-70 pip stop. Simple as that. Mechanical stops you want to put behind level 2. Swing 1, 2, 3. This spike would have been protected by putting your stop behind the high of swing 2. Swing 1, pull back is swing 2, 3 is the close, and break. Stop would have been above swing 2. Add your spread on there just to be ultra safe, which in this instance this is a weekend spread, so it's probably 1. Add a 1 pip spread on there, and that's your safe. That's your what can I say, coffee break stop. And as I said before, if you'd entered somewhere around here, that was less than 10 pips. You have your coffee break spread at say 12-15 pips, your actual emergency stop at 25 in case anything stupid happens, or you know, just automatically put that because you're not sure what your ADR is. The minute you've worked out your ADR and where level 2 is, then you just calculate your stop accordingly. Okay, thanks for watching, have a great day.